Hello, good morning. Hello, good morning. Hello.
Good
morning.
It will balance 36,000. Lórí tèmi ò sọ̀rọ̀.
Can you hear me in the house? Good morning, everybody.
Yeah, good morning.
Yeah, so I'm so sorry I came late. I was having a network problem, and our technician wanted to fix it up. My name is Mr. Ushe. I'm the one taking us in today's training. I hope all of us can hear me very clear and loud.
Yes, you are audible.
Okay, no problem. Do you have some beginners in the house, or you have already traders? Hello. I want to first start by introduction to forex trading and commodity trading to help those that are new in the system. I believe some of us are still new. I would like to take a few minutes to introduce forex to all of us. I have already sent some information to some people. I don't know if they are here with me. Hello. If you want to ask me a question, I prefer you raise your hand or you send a chat. I will read it out and attend to you.
Hello, hold on.
I'm with you. I can see Obina is talking. I want to. Okay. I first of all want to let our beginners know about our platform. It is called MT4. I think all of us have seen it. This is our platform. Our MT4 platform. I hope you can see the screen very well. This is on this line is where you see the currencies you are to trade, and also other commodities. At this point, as you can see, this is Bitcoin. This is crude oil. This is crude oil symbol. This is Euro USD. This is JBP JPY. This is JBP USD. This is Euro USD. These are where you can see the instrument you are trading. And if you want to bring up more instruments, you go here. When you go here, you'll be able to see other instruments. Assuming you want to trade US Canada, you click on US Canada, it will come up this way. Then you can zoom it up, change it to this point. Then this is the current chart of US Canada. Then at this point is where you see the price. In trading, what you consider most is not the chart, is the price. Here is the price. For example, at this hour, US Canada is 1.24098. This is the current price of US Canada. At this point here, it's where you will see your balance. If you put your mouse on trade, you'll be able to see your balance. For example, what is here is 36,000 US dollars. Here,
$6,000.
yes, this is where you see your balance on metaphor. Like if you put it on trade, you see your balance here. Here is where you see the history. The history of this account, how it all started and all of that. This is the history.
Crazy.
This is the history of the account.
20 euro USD.
Hello?
20 euro USD.
Here is the history. Under here is where you see the history of all that happened to your account.
Yes, I can hear you.
Yes, if there is a loss, like for example here, if there is a loss, there's profit and all of that, then it is under here. Here is where you see the summary of this account. Like you can see, this account have gained about $6,000 profit, and the current balance is $36,692. Then, assuming you have more than one account, this is where you see all of them. As you can see, these are other accounts. When you check this account, you can log into another account. This account is having $1,346. Then, but you cannot see this balance until you put your mouse on trade. If assuming is on exposure, you'll be able to see your balance accurately and all of that. Then on this chart, we have two types of chart. We have the bullish and the bearish. Bullish is the green chart, which represent buy, and the bearish is the white chart, which represents sell. But like I said earlier, the most important thing to consider is the price of the commodity or the currency you are trading. It's not just the chart. The chart moves together in direction with the price. For example, now, if the price of US Canada is going to appreciate today, it currently is at 1.24095. If move from 1.24096, 097, 098, and continuously going up, you discover that the chart will be moving together with the price. So what actually drives the market is not chart, it's the price. It's important that we consider price rather than focusing on chart. Then we also have different time frames, like we have 1 minute chart, we have 15-minute chart, we have 30-minute chart, we have 1 hour chart, we have 4 hours, we have 1 day, we have 1 week, we have 1 month. Each of these charts represent time frames. For example, this is a monthly chart of US Canada. US Canada for the month of September is actually showing down trend. So this is the current position of US Canada for the month. Throughout last month, this was their performance. It was up before, and the market eventually came down and closed at this point. Assuming you put it on daily trade, this is the current market of the day. This is the current market of the day. From this candlestick down to this point are all previous charts. Here now is the current Here is the current candlestick of US Canada. This same rule is applicable to all the currencies, including Euro USD, JPP USD, JPP JPY, crude oil, commodities, gold, indices. For those of us that want to trade on gold, this is where you can get gold. When you click on this point, you click on gold, silver. When you tap on gold, the price of gold will come up. Currently, one ounce gold is $1,334 per ounce. That is the current price of gold. When you Google it all over the world, you see that it will be the same price. Are you with me, House?
Yes, sir.
You discover that it will be the same price. For me, I don't trade gold because gold will require a lot of money. But a beginner can still trade gold with $10,000 or less than that. But most important thing in trading is not just the chart. Most important thing is the forces that drives the market. One may ask, what actually pushes the price of commodity up or down? Let's, for example, crude oil. In Nigeria here, it is the major source of our government revenue. I believe that every Nigeria must know about crude oil, at least fundamentally. What actually drives the price of crude oil is the demand and supply. Demand and supply, government policies, and natural disaster. For example, at this point with me now, you discover that crude oil is at $47, $33, $47.33 per barrel. Check your website, check everywhere. The crude oil will be the same amount everywhere. Check everywhere. The current price of crude oil today will remain is $33, $47 rather, 33 cents per barrel. That is the current price of crude oil. I hope you can see the website I'm sharing with you.
Yes, oilprice.com.
Yes, oilprice.com. This is where I usually get information about oil. Now, this is the current price of crude oil, $47.31 per barrel. On platform, when you check on forex platform, you also discover that the oil price is also the same price. Look at the price, the forex platform. It is still $47.34 per barrel. Currently, because of the hurricane I'm seeing your name, Yumi Abiona. You can type your message. I will read it out to the house. You want to ask a question, but let me explain something. Let me explain something about oil. As you can see now, because of the hurricane that happened in the United States, about 8 refineries shut down, and there's still gonna be more disasters in the United States, which may push the oil price up. Because of the demand in heating gas now is increasing every day. So the current price of that was why oil price went up last week Thursday from $45 per barrel to $47 per barrel. What I'm trying to explain here is that we don't just focus on technical charts. Even most of us say it's confusing. It is important that we focus on fundamental analysis, what actually drive the price of currencies or commodities up or down. So we use our knowledge about the economy to trade on all these things. Are you getting it? Now let me also share another expo. Because of the disaster in United States now, there's some analysts are analyzing that the strength of US dollar is going to go weak. Will be more weak this week because of what happened to Texas and the Houston and all of that. Now, if this prediction goes accordingly, it's going to affect the strength of dollar. Dollar will go weak. there will be weaker dollar, and in this case, dollar will fall against its opponent. I believe most of us have read my article, the little note I sent on email concerning the fundamental analysis about trading. I said, you know, in currency trading, you trade currency versus currency. Maybe let's say euro versus US dollar, or US dollar versus Canada. So if a currency or a particular currency is weak, the other currency will take advantage of it. If the other currency is stronger than this one will take advantage. And what makes these currencies to get weaker and stronger is the economic reality of their country. The economic reality of the country they represent. For example, if Nigerian economy is weak, definitely our naira will be weak. If our economy is strong, our naira will be strong. In the sense that the price of naira will appreciate against dollar. For example, if you want to trade Nigerian naira, you can go down here. You will see Nigerian naira is somewhere here. Somewhere here, you see Nigerian naira. Let me try to bring it up for us. Look at it. Look at this is Nigerian naira versus US dollar versus Nigerian naira. The current price now is $365 per naira. This is our Nigerian naira. Assuming you want to trade on Nigerian naira, you have to focus on Nigerian economic activities. That is what determines the strength of our naira. If naira gains strength against dollar, the market will go in our favor. If Nigeria loses strength against dollar, the market will go in favor of US dollar. Are you with me, House?
Yes, yes.
Yes, we are with you. Go on.
Okay. Now, that is the most important thing in trading. It is more of fundamental analysis.
Fundamental.
Yes, that is what drives the market. On platform here, it's just where we watch and execute command. On platform like this, on Metaphor platform, is where we watch as if we are watching television. That is where we watch and execute command after reading fundamentals. Like now, we are expecting to sell crude oil when it gets to $48 per barrel or $50 per barrel. That is at the point we are expecting to sell, because it has already gone up. Now, back to oilprice.com. Now, this is oilprice.com. Look at the heating gas. This is their current market, their current price rather. This is gasoline. This is the current price. Last week, the price of heating gas went up because of the hurricane. Then now, this is Brent crude, but the major commodity we trade here is crude oil. We don't actually trade all this one because globally, not all the countries make use of heating gas, gasoline, and natural gas.
Natural gas.
Yes. So we focus more on crude oil and currency trading. Another area we focus on getting analysis is on Bloomberg. Yes, this is Bloomberg.com. As you can see, you see commodities, stock, bond, currencies, future income. Then when you click on currencies now, you will see economic news about currency. Now look at the same thing we are watching. This is Euro USD. This is their change today, about 54 pips. This is JPY. Look at that change. Today, JPY is very down. This is JBP USD. It is a little bit down. Then when you go down here, you will see some new, look at some economic. This news came in 16 minutes ago. It said North Korea nuclear touch, also Korean stock currency again. This is where we get other fundamental news about what is happening. Then we relate them together with trading and know the best position to take. One thing about news is that that news varies. There may be some breaking news that will just come up, and the market will automatically revise to that particular position. Do you have any question now?
Yes, I do. I will type it.
Okay, no problem. Then
You can check your.
someone have sent me a message. Let me try to check the message. They say, so you are more of fundamental trader. Yes, fundamentals is the basic thing about trading. If you don't know anything about news, about the economy, you won't be able to know the best position to take in the market. Technical is important, but fundamental is more important. You have to know the basic. You have to know the fundamentals.
Basic.
Yes.
So it is the fundamentals.
Yes, it is the fundamental. Fundamentals are the economic event that it is what drives the price of any commodity you are trading. For example, on crude oil now, what drives crude oil is demand and supply. Natural disaster, government policy. When there is much supply in the market, the price of that commodity will drop. Then when there is more demand on any particular commodity, even if it's currency, the price of the currency or the commodity will go up. That is why, but from the news, we'll be able to know if there's going to be a demand or lesser demand on any particular currency. Are you getting my point now?
I'm getting it.
So without you knowing the fundamental, the news, how to interpret the news and the economic event of any country you are trading, it's difficult for you to know the best decision to take. Then another thing that is important in trading is the average price. For example, now this is let me use Euro USD for example. This is Euro USD on daily chart. Now this is their price since August till now. The price of Euro USD have not passed this price. Have not passed 1.16535. That is the lowest, and the highest is this point. So now this is another strategy to use. You buy the currency when it's very low, and you sell the currency when it's very high, using the average. Okay, let me give you another instance from a 4-hour chart. Now this is a 4-hour chart for since August 28th. The lowest price of Euro USD is 1.18260. That is the lowest. While the highest is around 1.220. That is the highest. Then now, assuming you want to sell Euro USD, I will recommend you sell Euro USD at this price or within this price for the moment. And if you want to buy Euro USD, you buy at this price. Don't buy in between the price or sell in between the price. This is another effective way of trading. You buy a commodity or any instrument you are trading when it is very low, and you sell it when it is very high.
Mary, yeah, my buddy.
Someone asked me which site is good for news. I say Bloomberg.com, oilprice.com, oilprice.com, and you can equally use forex factory.com. Then I want to say another thing about our platform concerning how to trade. Many people don't actually know how to set a stop loss or target profit. Are you with me, House?
Yes, we are with you.
Then, assuming you want to place order, it is on new order. This point, this is where you click order. Then, before you place the order, you must first of all select the currency or the commodity you are trading. Assuming I want to buy crude oil, I will click on crude oil first. Then I will now go to new order. Before I place buy or sell, I will first of all select my volume. This volume is called lot size. Then now, okay, let me use currency for example. If I select Euro USD first, I'll go to this new order. I will select my lot size. For example, if I select one lot size, this is called lot size. If I select, hello, are you with me?
Yes, we are with you.
Yes, we are with you. The background noise is so much.
Someone is making
Please, kindly go away from where your child is, or send your child to where there will be noise, please.
Someone
Hello.
child is disturbing.
Mr. Ahmed,
Yes.
As I was saying, so as I was saying, if before you place a trade, you must first of all consider your loss size. Your loss size is how you measure your profit. It's also how your loss will occur. For example, if you're trading an account of $100, personally I recommend 0.10. When you're trading an account of $100, if you're trading an account of, let's say, $10,000 account, I recommend you to use 1.0. There's account of $10,000 account. Then, if you're trading an account of $1,000 account, I will recommend you to use one lot size. That is one lot size to place a trade. Then, if you're trading, let's say the balance account here is $36,000, I can use 3.00 on this account. This should be my highest lot size. Assuming I want to place two trades on two different currencies, I'm splitting to 15.00 into 2. That should be my highest.
Yes.
Are you with me now?
We are with you.
Then this volume or lot size is one of the best way to manage your risk. Some persons will have just $100 account and they're trading with one lot size.
Some be using one lot.
Yes,
I've been there.
yes. Some even use 3 lot size. So, and you know that market fluctuates. Fluctuation of market may push you out of the market at any time. It is very, very important. Then, at this point, if I use one lot size, let's say one lot size to place trade, each pip will give me $1. If it's buy or sell, it doesn't matter. Each pip will give me $1. So if I gain 2 pips, I gain $2. If market moves in my direction for 10 pips, I gain $10. Then assuming it's 10.00, each pips give me $10. If the market goes in my favor for 50 pips, I will gain about $500. Are you with me, House?
We are with you.
Yes.
Then now, let me say something here. Assuming you are trading with only $1,000 account, and you choose 20, that is 20 pips per one. That is $20 per 1 pip. Then, if the market goes against you at the first place, minus 20 pips, which is common in the market, you'll be having minus $200 in your account at the same time. I mean, in your equity. This is equity. This is equity. This is balance, and this is margin. which is not good. It's not a good strategy. On this 20 lot size, it is advisable to use it when you're having $20,000 account. That's when you can use 20 lot size. It's not that $1,000 account cannot enter a trade of 20 lots, but I would always advise that it's better you take a minimum risk than for you to want to gain all the money at the same time, and you end up putting yourself in trouble. Then, when you select this lot size, for example,